hopefully you got a chance to attend our live training sessions yesterday after the close at 4:30 or last night at 9 p.m. If you didn't and you're registered, make sure you check your email for the links to the replay so you can watch. Covered a couple trades on the S&P 500 based on what the Fed did yesterday. And if you did attend and you're ready to get on board, make sure you go to t3live.com/special-offer. We originally were only taking 75 traders, but based on the literally thousands that registered, we've released 10 more slots to 85. And I checked with the ops folks this morning. I think we're maybe about 20 seats to go. So if you were on the fence, you better get off the fence here pretty soon before we close this down. Okay, so t3live.com/special-offer. Okay, let's get to the flight schedule. Obviously, the Fed meeting yesterday was more or less a non-event, which means upcoming Fed meetings are definitely going to be events. Remember the Fed meetings leading up to when everybody was playing guess when Bernanke's going to start the taper? Remember the VIX? I showed the VIX last night, and the lead up in volatility to the Fed meeting. Let's take a look at the VIX 2 years. Let me pull up the 2-year chart because and I did this last night. This is May and June of 2013. Look at the spike in the VIX from 12 to nearly 22. Now, I asked a lot of the participants last night, what was the market doing in May and June of 2013, and with the VIX going from 12 up to 22? And about 99% of you said what? Oh, market obviously imploded if the VIX spiked like that. It didn't. We are still tapering at $85 billion a month, and you can't fight $85 billion a month in liquidity being forced into the market. Why did the VIX spike like this? Because everybody and their mother, including mine, believed that was the meeting where the Bernanke was going to start to taper. And he didn't. As soon as he came out and said, nope, game on, no last call, we're going to keep this bar open, the VIX imploded. Take a look at what happened leading up to this Fed meeting. Look at this nice little, ski slope, so to speak, of the VIX was kind of creeping up here, and then a smash and vol yesterday based on game on. Okay, so the Fed chairwoman, she's actually on the road today. He gave a speech this morning to low and middle class folks. And because obviously the Fed policies have more or less just helped the, quote, evil 1%. Don't get me started. But very, very interesting to see the market reaction here. Market, when I'm shooting this, S&P's up 6, Dow's up 70. Why? Well, it must be some good economic news out there, Whiz, and you'd be wrong. Building permits, lower. Weekly unemployment claims. I'll talk about that in a second. Housing starts, miss. Philly Fed, miss. So we are still in bizarro market. Good news is good news. Bad news is good news, and awful news is great news. Housing starts were not that good, and they imploded mainly based on the collapse in multifamily units. Okay, and this is interesting because yesterday, the National Association of Home Builders, their confidence rose to a 9-year high. Remember, whenever you're asking home builders about the future, what do you think they're going to be? They're most likely that's their career, that's their bread and butter. They're going to be confident, or at least they should. And here we come today with housing is a leading indicator, right? The housing starts and permits tumbled last month, right? Sliding 5.6%. Okay, and that's not good. We saw a decline in every region of the U.S. with double-digit drops in the Northeast and the Midwest. Housing starts tumbled by 14%. Okay, and then now we're seeing today just a more slew of bad news on the housing front. Initial jobless claims, they were at that 3-month high to a 14-year low. Wow. Very, very interesting. 280,000 is dramatically better than expectations of 305 that was forecast, right? Initial claims has only been lower once in the last 14 years. And yeah, just don't tell Janet, right? As a result of our Fed meeting yesterday, look at the GLD, folks. We broke 118. We're down at this 117 level. It seems like people are forgetting that the BOJ, the Bank of Japan, the PBOC, People's Bank of China, the ECB, European Central Bank, they're all calling game on. Based on those horrendous industrial production numbers out of China, everybody and their mother, mine included, expects the PBOC to jump in with some QE. Kuroda coming to the party again with some more QE. Mario Draghi, hey, I'm going to do whatever it takes, and here's some QE as well. So we're the lead ship in this effort to kind of pull back on quantitative easing, while the rest of the world is still kind of jumping on board and game on. They're not closing their bars. Look at what's going on in the GLD. We broke this. I told my traders at TGO, if we break 119 with any sort of airspeed, look out below. Now, obviously, you never want to pick a bottom in anything, but take a look at the last time we were this low in the GLD. June. We used this 120 as a nice springboard. There was a big technical break in the GLD, and bang, look at that. Now, again, nobody sounds an air horn at the top of a market. All right, everybody out of the pool, GLD's going lower, right? No, and nobody's going to sound a horn at the bottom here saying that, the GLD implosion has stopped and time to get bullish. But just based on, once the euphoria, quote unquote, from this Fed meeting and Fed announcement kind of fades maybe next week, I think the GLD might start to catch a bid as people do wake up to the fact that Japan, China, and European central banks are going to continue to print more money into the global reflation trade. Okay, so but it appears that the West is going to continue to sell paper gold, and the East remains enamored, as the PBOC announced this morning. Right, they're going to jump in and prop up their market, doing whatever it takes. So I don't know, man. I feel pretty bullish on the GLD at this point. Okay. Hey, make sure you check out that replay though. Look at this bullish double vertical on Apple. It's a couple weeks old here. $3,800, $4,000, a 1,500% gain in this one Apple trade here. Make sure you watch the replay, guys. If you're interested in at all in getting airborne, learning how to trade options, now's the time to do it. T3Live.com/special-offer. Like I said, if we're almost full. If you get to this page and this click here to proceed button is gone or it's grayed out and it doesn't work, it's because all our slots are full. Okay, so get airborne now. Two great weekly options trades that I covered last night on the S&P 500 that hopefully are going to potentially show max profit of nearly $5,000 there, unlimited risk. Okay, so happy hunting. Make sure you hedge, and I'll be back tomorrow. Actually, from Philadelphia, going to be giving a speech up in Philly. I'll be back with our Friday market wrap up and a recap of the week. We'll see you later.